Okay, so what I'm going to be talking about is this is something like Sid said. I've been doing a lot of coaching, consulting with Sid for a while now, and learning about the things he's talked about and about specifically anchoring and things like that. But this is kind of how I've interpreted a lot of it and implemented it into trading specifically, but also like a number of areas of my life for sure. And one of the main questions, we've already run this program, and you'll see later that we've done an advanced program as well. One of the questions was in that advanced program was that, like Sid says, you can, when you go back and you go into a learning state for something that you've learned before, and you go to there, you are accessing circuits that have already learned something. So you're getting into that state of mind that feels similar. But what people ask, and I just saw it recently in the chat, someone asked, how do I build circuits around trading itself? So that's what I'm going to be talking about, is not only using the resources that we have from other areas, other times we've learned stuff, but also how, as we're trading, how can we form good neuroassociative programming with trading itself? And that's really what my part's going to be about. Okay. So, and I'm going to cover some of the stuff that he's talked about. There's going to be some overlap here. And also too, I'm a little nervous because I've not given these slides before. In fact, I just finished them like a day ago. So they're going to be very detailed. That's for me. So I remember what to say and how I want to say it. So anyway, give me a break here if it's a little clunky. So again, what I'm going to be talking about is purposefully engineering your trading approach and strategy to build successful habits on a subconscious level. I know that's a mouthful, but what we're talking about is having a purposeful trading strategy. And what's weird here is not necessarily to make tons of money. I know that's what we want to do as traders. We want to make money, but what this is kind of, you could think of what I'm going to be talking about here is kind of like a healing process for a trader that has a brain damage and is blowing through accounts. If you're losing, you're probably in this situation. So I'm going to be talking about engineering a healing process to rewrite all the bad habits that you have and build new anchors, new triggers that are associated with trading itself. So, okay. Anyway, I know that was a mouthful, so bear with me here. So what we've found over the last 10 years, like my dad mentioned, we've literally worked with hundreds of traders in person. We used to have an office here in San Diego. That was a long time ago. We sold that building. That's all gone. But in trade ATS, literally thousands of people. What we found is that the stats are true. 95% of traders never make it. So, there's nothing that's changed there. And there's reasons for all this. The question is why? And I'm going to go through all the reasons that I've found. And some of them are not going to be necessarily what we're talking about today, but I'm just going to go through them anyway. One is they follow mass education that does not explain objectively how the market works, how it really works. They're following traditional technical analysis, things like that. And these things can work at times, especially if you're really good at optimization. And when I say optimization, I mean changing your indicator settings, all those types of things. They can work if you're extremely vigilant to changing those settings. But overall, at the end of the day, technical analysis, especially like regular traditional technical indicators, don't give us an objective way to explain every single thing the market does. When that system breaks, you're just like, oh, it's probably just the system's bad. I just need to reevaluate. We're going to talk about that later. So I apologize if I keep looking up here because I got you guys on a screen up here. So I'm not looking off into space. All right. So without understanding true market dynamics, you can never truly understand the nature of the game you're competing in. That's kind of what our methodology is about. It's understanding, number one, why people lose money and who's making it. If 95% of traders are losing money, where does all that money go? It doesn't just evaporate. Who's getting it? And what are they doing to get it? That's an objective way to view the market. So an example of this would be like a moving average crossover means buy. A lot of people treat trading like it's a game of lines crossing and price bouncing. And I need to get the lines to cross at the right time. And I need to know which price bounce lines I need to trade back and forth and so on. So this is how a lot of traders come into this business. So like, I just need the right indicator. I just need the right system. This is how I came in. I thought it was like, oh, look at the thing. It just bounces. It goes up and down. I'm like, okay, if it just goes against this line, then I'll buy or sell, or, if these lines cross, it seems very simple. But am I really thinking on that level about what's happening behind the screen? We got this large interbank market, especially in Forex, which is where I came in. You got literally, this is like the lifeblood of the world economy moving around. You think that the rest of these banks and these traders are literally watching the MACD crossover? They're like, all right, let's get ready. It's like, it doesn't make sense at all. That's not how it works. But again, I thought it was this way. And if you go down the mass educational, pathway, you're going to see a lot of this stuff. So another reason why people lose, they lack a repeatable process that builds confidence. And that's going to play into more of what I'm going to talk about here. And they don't understand how to trade safely within their pain and pleasure threshold. How many of you guys have seen the video I put on YouTube about pain and pleasure? Have you guys seen that and how it relates to trading? Yeah. Okay. That video, if you haven't seen it, I would highly recommend you go check it out. It's on YouTube. That to me, honestly, I think that's the most important lesson I've ever put out for me. That is the biggest aha moment for everything. And that is the reason why the ATS algorithm exists. That among some other things. But that to me was the big reason. I wanted to figure out, why is it so easy to lose? This market moves up and down 50% of the time it goes up, 50% of the time it goes down. Why is everyone's account slowly getting drained? My own, everybody I know. What is the deal here? It should be easier than this. And so it was a deep study into that. And that video itself, the pain and pleasure thresholds, understanding that is, to me, is still the biggest aha moment I've ever had. Anyway, I'm not going to get into that, but that's a big reason. But all this stuff, the going through different systems, not understanding these things, ultimately leads to a situation where traders cannot establish a winning mindset. And a winning mindset is really everything. So what is a winning mindset? A winning mindset is a belief in your system and ability to deliver the results you want over time, despite adversity. That's a winning mindset. Where a lot of people get discouraged, they give up. The winner charges right through and makes it happen anyway. That's a winning mindset. So why is developing a winning mindset so important for traders? That's a question. Well, developing a winning mindset overrides the temptation to change. We're going to talk about this too a little bit more here. But traders change. And the reason why they're changing is because they've been taught to. They've been taught to optimize system and strategy. I just need a better indicator. I need a better settings. Anything with settings is going to constantly have re-optimization. And that's going to cause the need to, I always got to re-optimize and change. When you have a winning mindset and you're very clear on what you're doing, you don't have that anymore. Developing a winning mindset allows you to execute your strategy with precision and confidence. Developing a winning mindset allows you to scale your earning power. Developing a winning mindset allows you to persevere through the ups and downs of trading without getting overly discouraged. And I'll go back to there. These things are very important, very important. You have to have total confidence in your understanding and what you're doing, so that you can maximize your earning power. You can not get overly discouraged when things don't work out because you have confidence in your approach. You have to get to that point. If you're not at that point, and mostly if you don't believe that you can win, you never will. Even if you win here and there, it'll be a fluke. You have to literally have this subconsciously wired into your brain in order to really, get where you want to go in this business. So, and ask me how I know. I'm telling all this stuff from mostly painful experience. So I'm going to talk a little bit about anchors and triggers, and I'm sure Sid will probably go into this a little bit more here. But this has been my interpretation. I am not an NLP expert like Sid. He's been doing this 45 years. I've studied this because honestly, all this stuff's because I had big problems with this. I needed to figure this out, and I am someone that's always looking. So you could take advantage of all the looking I've done. I'm presenting it to you and how I've applied it, and it's worked for me. Okay. So, but Sid's the expert on anchors and triggers, but here's my interpretation. Okay. Anchors and triggers are the reason we feel and act the way we do in different environments and situations. Like Sid said before, you have these external circumstances, these external things that happen, and they cause us to feel a certain way. That is an anchor, or a trigger. Anchors can be positive, neutral, or negative. Anchors become automatic programs that control our state of mind, basically how we feel and what our capabilities are. Our state of mind controls how capable we are in any given situation. If we're in a stupid state of mind, we're going to act stupidly. If we're in a very smart state of mind, we're going to act very smart. That's how it works. So an example of a positive anchor is, it's a beautiful day outside. You look outside the window, you can see it's sunny. It looks very nice temperature as well. That is an anchor that potentially could put you in the mood to go for a run. It's like, it's a beautiful day. I got to get outside. Now, if you looked out the window and it's raining and there's thunder and clouds, I would feel differently. I'm like, wow, it's terrible outside. I just want to stay in. I want to maybe put a fire on, get under a blanket, watch a movie. These are anchors, right? At least they are for me. That's how I feel, right? And I actually don't run at all. So I don't know how I came up with that. I hate running. I don't like cardio. Okay, so a neutral anchor is you feel hot and you're like, okay, I feel hot. I'm going to turn on the air conditioning. It's like, okay, and it's done. Like, or maybe if I feel cold, I'm going to turn on the heat, whatever. It's just neutral. A negative anchor could be, I feel stressed, something happened to me, and that causes me to maybe overeat or overdrink. I know a lot of people have that problem, right? So, that would be negative. It's like, this thing happens and it makes me do self-destructive behavior. So anyway, that gives you just a couple of examples, kind of how I perceive anchoring. So now we're going to talk about anchors in trading. How we trade influences the type of anchors. I wrote or, it's supposed to be of. The type of anchors and associations we form on a subconscious level. So this is important. If we're not careful to trade the wrong strategy carelessly, we will anchor automatic feelings of loss and stress, and this will dominate our mindset. So bear with me here for a second. If you're out going down the mass market way of technical analysis of what is taught out there, that is literally why 95% of people are losing, is not understanding it's not only the technical analysis, but not understanding the true market dynamics. You're going to have a lot of painful experience. Okay. What's ending up happening is that you're going down this road. You're probably losing. You maybe have some wins here and there, give you some hope, but ultimately you're losing. All that loss is all experience that you're taking in subconsciously that's not giving you the best neuroassociative programming for trading itself. This is a problem. Some people will go down this path for 20 years, going from system to system to system, literally hardwiring losses into their subconscious mind. And you wonder why. They look at a chart. This is one of the things that we talked about on our last advanced session that we did. And the people that were in there, one of the things they said is, I feel great when I think about, how I learned to ride a bicycle or how I learned to play a musical instrument. But when I think about trading itself, I feel like a complete loser. I have nothing but bad experience. This thing has just murdered my confidence over and over and over again, right? So this is a problem. So what I'm talking about is combining what Sid does, but also taking what he does, which works very well, but also as you go forward, we're talking about constructing an approach and a strategy that you trade that heals all that. It takes all that damage you've done to your self-confidence and everything, and it puts it in a very predictable way where you can fix all that and build a new platform of confidence that you can then continue to scale up. It's kind of like a trading rebirth. So that's what I'm talking about here. And that's what I saw was the thing that could be added to this program that we didn't do last time. So again, this is my attempt to convey that. Hopefully I'm doing a decent job so far. So anchors are created in two main ways. And there might be more than this, but this is the ones that I really connected with. It's repetition and strong emotion is the ones I'm going to be talking about. Okay. And we're going to be talking about how programs are made. Okay, this is how I've interpreted it. Sid, I wrote this slide. I showed Sid a long time ago. He's like, that's in a book. I'm like, really? I must have saw it somewhere and it stayed in my subconscious mind. I don't know where I read it, but it really stuck with me. Okay, so we have triggers, like Sid said on his slide before. You have these external stimulus that happen. I'm going to be talking about forming a new program. So I'm talking about unique external stimulus, unique internal thoughts and pictures, unique feelings, emotional and physical. These are all potential triggers, right? And they could be unique. Someone, you could be walking along and someone, just starts yelling at you or screaming at you, or something happens. And you're like, I don't even know this person. Like, I don't know what's happening. And maybe it's at a certain place at a certain time, whatever. And like, all you come away from is like, I had this horrible experience. This person just came out of nowhere, started yelling at me. That was unique, right? I didn't know that person. And now every time I drive by that place, that it was a restaurant or whatever, I'm like, yeah, remember, that's where that person yelled at me. And you feel exactly how you felt then. And you're like, yeah. So that creates a new trigger associated with that person, that place. So going through here, what ends up happening is that we have these unique external stimulus that happens, and then that leads to a conscious processing process. Conscious processing process, yeah. So when we have that unique stimulus, whatever it may be, that channels in our focus. And what we focus on is what we feel, okay? So that channels our focus. Then when we focus on it, we go through a mental process where we jumble feelings, thoughts, and words, what we're saying to ourselves in our mind, and the pictures we see. And we're trying to feel like, what is this like that I know? Do I have any thoughts about this already that are similar? Do I have any feelings about this? And we're trying to process what's going on here. And that ultimately leads to, we come up with some sort of meaning and belief behind that. So we have the unique external stimulus that channels our focus. We go through this thoughts, words, pictures, feelings, processing process in our mind. And then we spit out a meaning or belief. Okay, based on my experience, this new unique trigger means this. Therefore, I now believe this. Okay? Those beliefs control our life. They not only control our state, our temperament, how our mindset, they control our actions and our reactions, what we actually do, and they control ultimately our personality traits. You know that by the time you're 35 years old, you're basically 95% subconscious programming. It's just a bunch of programs you just run over and over and over again. And as you get older, it just gets more and more, it just stays that way. So in order to change any of that, you got to learn how this works and exercise some conscious control over it. So anyway, this ultimately leads to our personality traits. And then all these things together lead to the potential results we're going to get. How we act, how we feel, and the kind of personality we have is going to give us the kind of results that we are experiencing. So you can see when it comes to trading, having conscious control over this and knowing that this exists could be potentially important, right? This consolidated into this unconscious, this is a consolidated unconscious sequence here that just to kind of make this simpler. We have familiar triggers then. After we get the external unique trigger, it creates the program and it turns into this. Now that becomes a familiar trigger, which causes us to focus on it. We run the unconscious program that creates the meaning, and then we get the familiar output. So you guys hanging with me in there, or have I lost anyone? Everyone okay? All right. So this right here is basically this consolidated unconscious sequence. From my belief and my experience is how we all run our lives. We go from trigger to trigger to trigger, which takes our focus, which makes us say, okay, that person said that to me. Which program do I have for that? Oh yeah, okay. That makes me think, feel, and act this way. Okay, let me give my output. Here it is. And that's what we do. So unless we're conscious of this and we don't like the results we're getting, we have to really exercise our conscious ability to reprogram this. And that's what we're going to be talking about when it comes to your trading strategy. I'm not trying to go down all the rabbit holes that we have as far as trauma and all kinds of things. This is very helpful with that. And you'll notice talking with Sid and what he presents, this stuff goes through your entire life. It's very deep and the healing effect it could have. But what I'm talking about here is how can we consciously engineer our trading approach so that we can create good programs? Because most of you guys, if you're not getting the results you have, it's because you have bad programs. is probably, you're all very smart people, but you have bad programming that cause you to feel a certain way, that cause you to do the things you do. And it's usually self-sabotage. So, all right. So going back, we write subconscious programs through the following two ways. I'm going to speed it up here too, because I know Sid's got to get back to his part here. So we have repetition. Repetition helps us master motor skills like playing an instrument, driving a car. I think we're all very, we all understand these types of things. You drove a car the first time, you're probably very nervous, but as you drive, I know like sometimes I'll be driving and I'll be like, man, I just went like 5-10 miles and I don't remember it because you're lost in thought. How does that happen? You're driving a piece of machinery, thousands of pounds and not thinking about it. It's because it's repetition has created an unconscious program and you just run it. So same thing playing an instrument. Now, the other one that is really big, I want you guys to pay attention to this one, is emotional signature. And some of this stuff, I'll tell you this concept. I did not make this particular thing up. I read about this in a book called Becoming Supernatural by Joe Dispenza. Is my the resource on this if you guys want to look it up. But he talks about emotional signature in programming. So you take what we talked about before, where we have these triggers that channel our focus. Then we go through our thoughts, words, pictures, feelings program. What does this mean? And it might be something we've already have meaning towards, or maybe it's new. And that creates the meaning and beliefs we have, right? That creates our output. So now there's a difference here of how strong these programs can be made. Okay. And it's the emotional signature, the emotional energy behind when you get this unique trigger or this unique stimulus and you run this program, the amount of emotion that you're experiencing at that moment could be the difference whether the program gets written deep into your subconscious, like into the fabric of who you are, or you forget it and it doesn't even matter, right? So I'm adding this little chart here. So we have basically on the up scale, you have your emotional intensity. And then on the sideways scale, you have the experience you're going through, which is, you'll notice it matches the program above, right? So we go through this processing process, and then the amount of emotion that we're experiencing while we're doing that processing can tell our brain, is this important or not? And that peak emotional energy is really what strengthens the program. So click through here. The emotional intensity of an experience tells the brain what's important to remember or make into a subconscious program. This is why you can remember getting an award, getting in a fight, going through childbirth, if you're a woman, or I guess a man there too, right? Or any other significant experience in detail, but you can't remember what you had for lunch yesterday, right? I mean, you have a program for eating, you chew, you do all this. Is it that emotional experience? Well, maybe if it's like an amazing meal, right? But overall, like there's not a whole big emotional signature. But if I tell you, like, if you got an award or maybe you got married or, something, hopefully good, also bad things, but something you have high emotional energy around, you're going to remember all those unique stimuluses. You're going to remember the setting. You're going to remember, all those things. And the subconscious is really going to grasp onto that and create a heavy meaning. And those are the ones that we have to worry about in trading. If we experience a big loss, we experience certain things like that, or even a big win, our brain's going to be like, what was I doing at that point? Well, it's going to create a program in and around that. So this is just something to be aware of, is that when you're experiencing, Sid told me something one time that was very eye-opening to me. He said that I was talking about an experience I had, and I didn't come away from this experience very well. It was really difficult. But he told me that what ended up happening is I had this experience. It was very emotional at the end of it. And he told me, when you went through that, and it was right after, he says, your brain was wide open because that emotion just tears your brain open. And you're trying to figure out, what does this mean? Is this, what does this mean for me going forward? What does this mean? All this stuff. And you're very suggestible in that moment. So what you put in your brain when you're highly emotional, or what someone else puts in your brain, the brain can easily latch onto that and create a program. So it's very important. And I know if you experience a big loss in trading or in life, or maybe a big win, you're highly emotional. You're trying to figure out, number one, if it's a big loss of any kind, how can I avoid this? What is unique here in this circumstance that I can remember and avoid later? Or if it's a big win, what is unique in the circumstance that I can remember that I can duplicate this or do it again, right? So the emotional intensity signature is something to pay attention to, and be very aware. The thoughts that you think, the words you put in your brain when you're highly emotional are writing those programs that you're going to run potentially for years. And if it's highly, highly emotional, then this is something that could be very difficult to unwire. So this is, a lot of people have trauma responses, and it's because of something, PTSD, things like that. Highly emotional situations, people potentially feeling like they're going to die, they have taken away all that. So if they get in a situation where there's, a loud explosion or noise, they start to lose it. It's because that was all the unique stimulus that when they were very scared. So anyway, this is how these things are written. So anyway, emotional intensity writes programs much faster, sometimes immediately, in my experience and from what I've read. And from what I've learned. So the question is, how can we consciously use both to write the programs that we want? That is a question. If number one, we become aware that you can write programs, that there's even these things called programs, how can we actually put good stuff in there that we run automatically? That's really the key. So I'm going to talk to you about this concept. This is something that I learned. It's from a great guy. He doesn't put out a lot of content lately these days, but his name's Martin Cole. He's where I learned about the 3 market phases. He has a YouTube channel. Very nice guy. But this is the first time I saw this right here. And he talked about this thing called the trader's prison. And so I want to briefly walk through this. This is probably going to resonate with you guys if you haven't heard this. And other people along the way have had their own spins on this, but this is always impactful for me to kind of explain the process that traders go through. So you start with a new strategy. Okay. That's where everyone starts. Like, okay, I want to get into trading. I got to get a strategy. Okay, here's my strategy. That leads to usually some sort of demo trading. Once you've optimized a strategy, you figure out, okay, I got it. Like, I think I'm good now. You go to demo trading, then you'll probably experience positive results. Okay. The reason why you're experiencing positive results in your demo trading is because, going back to the video I made, the pain and pleasure response, it's not really the same as having real money on the line. So your pain response, which is the pain, is what causes us to immediately get out of bad trades. We do it subconsciously. Well, the moment we feel a pain, we're like, I got to make this stop. We book losses naturally. You don't have to study for it. No one needs to teach you. You just see money being lost. I got to get out of this trade. I'll book it. Whereas, this is a short 30-second lesson on this. If you haven't seen the video, when you're in pleasure, money's going up. It's a great trade. I don't want to stop. I'm going to stay in them. I got to let my winners run. You become totally lackadaisical. You don't take the profit off the table, and the market ranges 95% of the time. Guess what? There's a 95% of the chance that as you see profit, that whole thing's going to be wiped away if you don't book it. It's the way it goes. So pleasure causes us to be totally lackadaisical. We don't take action. Pain, we take immediate action. I'm losing money. I got to get out. Guess what? You become a natural machine at booking losses, right? And again, you don't have to study for this. You do it subconsciously because we're wired to avoid pain, right? But the demo account has no pain associated with it. We experience positive results. We break our rules. We don't do best practices. And you usually get rewarded because the market comes around 95% of the time. You move your stop, you do whatever. You're like, I wouldn't do this if it was real money. We've all said it. I wouldn't do that. This is just, once I get in my real account, I wouldn't have broken that rule. Yeah, right. Okay. Anyway, so you get positive results, and now you're like, okay, I'm ready to go. Now you go to your real account, right? Totally different game. Now the pain's real because you see the dollars getting flushed down probably faster than a gas pump, right? That hurts. That leads to losses, right? That leads to loss of confidence, which then leads you to abandon your strategy, which then leads you to say, I just need to tweak my settings. I need to do some more back testing, which then leads to your new strategy. And you get to rinse and repeat over and over and over again. And this lasts for however long you want it to last. But for a lot of people, they will go through this for years, years and years and years. They will rinse and repeat this process. Okay. What we want to do through helping you guys reprogram your subconscious, all these things, understand the right methodology to be trading or where to start. We want to get you guys on the winner's curve. Okay. The winner's curve also starts with a new strategy, right? And hopefully it's the one that we teach or one similar, where there's many ways to skin the cat. That also will lead to probably some demo trading, which is fine. You got to at least learn how to buy and sell, learn the mechanics of trading. Hopefully that leads to positive results. That's going to go to real account trading, which will hopefully lead to wins and lead to a boost of confidence. Okay. This is what ends up happening when you have the correct strategy and you have the correct winning mindset. Everything that we talked about right here, from new strategy to boost of confidence coming around the wheel like that, there's an engineering process that needs to happen to make sure you get to the wins and boost of confidence. Okay. And that's what we're going to be talking about, is the strategy behind this, right? When you get the boost of confidence, remember the last wheel was loss of confidence. Now we're at boost of confidence. We want to go to the inner part of the wheel. That leads to consistent execution because we're getting positive reinforcement that what we're doing is working. That's going to lead to more positive results. That's going to lead to more boost of confidence, which is going to lead to profitability and scale. And we're just going to keep going around the center of that circle. That is a goal that we want to get you guys to. That should be your goal. But again, the key is engineering your strategy and approach to make sure this happens. The reason why this isn't happening for maybe some of you guys or most other traders is because they don't have a conscious way to engineer the good, positive experience that gives them the positive anchors and associations with good behavior and best practices, what we call the unbreakable rules of trading. It's on purpose. They're just waiting to get the right strategy that makes them feel good that they'll just continue to do. And if it has any kind of settings or optimization, you're going to be on that wheel that we went through before, the trader's prison. That's usually where that leads. And you're going to be building more and more and more bad associations and bad habits, right? Okay, so we're in the situation now where we need this winning strategy that gives us positive progress, that keeps us executing our winning strategy. We want this positive reinforcement loop. What are the things that poison this loop? Okay. And keep us from getting through the success barrier. That's what we're all trying to get. The strategy is a tool to get through the barrier that leads to success. That's what we really want to do here. So inside of this, we have this poison of self-sabotage. What forms does this take? Constant change is the number one. From my experience, from working with a lot of people, constant change by far is the number one killer. Change of technical approach, system jumping. This is what we went through on the trader's prison. This could be change of indicators, change of markets. Maybe you're trading stocks one day, you're trading Forex, or maybe you're trading a bunch of different Forex pairs, a bunch of different crypto pairs. You never learn to specialize in anything. You're always jumping. Change of time frames. That's even another way of optimization is trying to optimize what's the best time frame to trade on. One day I'm trading a 5-minute chart. Next day I'm trading a 4-hour chart or a daily, and you go back and forth. This is all forms of re-optimization that leads to that constant, never-ending chasing of the perfect system. Ignoring fundamental rules. We talk about these. We'll talk about these again in a minute. But trading against trend. You ever hear that saying, the trend is your friend? It's true. The trend is your friend. It puts probability in your favor. In fact, I think it's one of the only things that puts probability in your favor when it comes to understanding true direction. People ignore it. They're like I'm handing out, you could watch, we do this on our webinars all the time. We'll look at a weekly chart, and we'll do this in a second too. We'll look at a weekly chart and like this market went one direction, whether it be up or down, for 12 weeks. One direction. And it does this regularly, okay, on these higher time frames. And you look at how many times did you sell against that? It's literally the wind could be at your back It's telling you this is where the banks are driving the market. Yet you're like, that doesn't matter. Like that is something you can control. You can choose to trade in the trend and have that probability on your side, but most people ignore it. It's a huge thing. Bad risk management, trading too big a lot sizes when you shouldn't. That increases the tightness to that pain threshold. The larger amount of money that you're in the market at, the tighter your pain threshold is going to be. And if the market goes like this most of the time while we're waiting for that trend phase of the market, good chance you're going to get stopped out. And you think you're doing yourself a favor by having that real tight stop loss. Well, you're going to get stopped out probably on almost every trade. This all comes down to these breaking these fundamental rules. And it's kind of the same thing I'm just talking about. Over leveraging your positions kind of goes along with bad risk management as well. Also ignoring black swan eventuality. That's the opposite thing. Some guys be like, well, I just don't trade with stops. And they'll experience a huge run of success without stops because they finally figured out, well, the market it does range. And eventually my trades all come and pay. So they'll usually still be over leveraged and they'll be like, I'll just take my stops out of it. But eventually that black swan event comes where it just keeps going. And then all that progress you made eventually gets wiped out. So because you have zero safeguards. So we'll talk about that in a minute, but there is a sweet spot in the middle there between not having stops and having too tight a risk management. There's a sweet spot in there, and it really comes down to understanding market framework and architecture of understanding where, how that works. So, but yeah, these are the things people are poisoning themselves with and not getting through the success barrier. The last one is lack of understanding. They're following mass market education, not understanding true market dynamics and the game you're playing. And we kind of went through this before, not having an objective, repeatable process for understanding market movement. So these are all the things that are keeping you from having the winning strategy and positive progress. So you could think of these as this is all poison that's going in there and not allowing you to build those good anchors that allow you to have that winning mindset. And when you approach trading, you're ready to win. It's all these things, and there's probably more than this, but these are the main things I could think of. So the question is, how do we make sure that we break through the success barrier? The key is to create an easy win strategy that is strictly designed to engineer good experiences, habits, and positive anchors associated with trading itself. Among the things that Sid teaches, he talks about having, going back to when you're in these good states, when you were winning, maybe you won a competition or something. What did that feel like? That also works. But what we're talking about is as you go, not creating any more damaging anchors, number one, associated with trading, eliminating that. And so that we can heal so that when you come to the screen, you feel nothing but being a winner. Like that's it. You look at the screen, you're like, I know I'm going to win. I'm a winner. How do we get you to that? Because that's where you will make the right trades. You'll do the things you're supposed to be doing and you'll have confidence doing it and you'll love doing it. You'll get to the point where you don't want to break the rules because it makes zero sense to you. That's what we're trying to get to, is have that on an unconscious level. So the key is having the easy win strategy, which leads to positive progress. That's a positive reinforcement loop. And then we're going to try to build a platform of confidence for positive anchoring. Okay. The key here, the goal is not to make tons of money initially. Okay. The goal is to write or rewrite the subconscious programs necessary for consistent trading. That's what we're trying to do here. So once the new programs have been written, you can scale up your earning power on top of that. So how do you create an easy win strategy? The strategy must allow for a high win rate while respecting the unbreakable rules of successful trading. Here are 4 of what I consider the unbreakable rules. Okay. Trade and trend, quality entries, undervalued, overvalued. For those of you guys that follow our methodology, the master pattern video on YouTube explains this thoroughly. Good risk management and time in the market. You have to make sure that you give these positions time to pay you. Okay. That's a big thing. That's Warren Buffett's entire strategy is time in the market. He doesn't even believe in timing the market. So we're trying to combine timing the market with giving it enough time in the market for the outcome to actually happen. In order to have time in the market, you can't be having tight stops. That kills your time in the market. You have to be wider. So we'll get into that in a second. So these are the 4 unbreakable rules. These are the best practices. If you do this stuff well, it's going to lead to a good positive reinforcement feedback loop, right? The thing that we would add to this that I think is critical is having low emotion position sizing. Okay. And I know this is not very exciting for some of you guys because it is fun to throw a big lot on there or a big position and let it ride. And if it wins, I know it's a great feeling. You don't need to tell me, but this is what Vegas was built on, is that feeling. Okay. So what we're trying to do is we're trying to take these best practices, these things, and then lot down just for now, way down, so that you can let most of those trades that will come around and pay you, especially in trend, you let those things come around and pay you. And when they pay you, you feel it. You feel good. You take note of that experience. And what we're trying to do, essentially, I'm just going to cut to the chase, is that we are trying to stack a bunch of winning experiences that are repeatable because you're using very low emotion lot sizing. If you're in Forex, you're doing all these best practices. So you're wiring in good habits, and you're going to let all this stuff pay you and rebuild that foundation of confidence. That's what we're talking about here. Okay. When you build that new foundation of confidence, that is something that you can scale up on because you have all brand new neuroassociative programming with this. This obviously takes time. But if you're serious about this business and you want to do this long term, then this is something that you might want to consider, right? So I'm going to briefly go through some technicals and then I'm going to wrap it up. Okay. The master pattern, those of you guys that are on here are probably very familiar with this. This is my interpretation of accumulation distribution cycles. Okay. I did not make this up. There's other people that have taught this before me. This is just what I've learned about how institutions work. And this is how I explain it to other people that have asked me. Okay. The master pattern starts with your contraction phase, which gives us our value or center of gravity. That's a lot of people think of that as like a pivot point. Okay. That's fine. The contraction puts forth the value or center of gravity. That leads to our second phase, which is our expansion. That's where we whipsaw out of the contraction. And then that leads to our third phase, which is the trend. And then you can see it goes back. We have the 1, 2, 3 phase cycle back again. This pattern is the only thing I've found in the over 10 years that I've been trading that gives me a repeatable way to classify every single candle on the screen. I can tell you every single candle is either in one of these 3 phases. And because I know which phase it's in, I have an expected way that it's going to generally behave while in that phase of the market. So this right here is the technical explanation of how the markets work. Okay. So what does this look like on a chart, and we're going to talk about this in the form of creating a easy win strategy. And this is something you guys can maybe figure out another way to do this. Those of you guys that don't do our methodology, that's fine. Either way, hopefully up until this point, you've gotten enough out of this to understand it's about building a platform of confidence, building the belief you're a winner so that you can scale up on that. If you don't have the winning mindset, it doesn't matter anyway. Okay. So our weekly bar chart, the directional change is confirmed along. Okay. And this is actually an actual data off a weekly chart here. I forget what market it is, but that is it. So the market changes long. Does not take a rocket scientist to see that this is going up. And you knew this from the first blue candle right there. On our software, we use a hybrid of Heiken Ashi and standard candles. That's what gives us a consistent color. It just really helps because we're all about not changing our directional bias. That, in my opinion, is what puts all the probability in your favor. Okay, we have the directional bias. We know that weeks, if 1 week is blue, chances are the next week is probably going to be blue, and maybe several more after that. If I know the direction of the week, I know what I'm supposed to be doing on a day in, day out basis during that week. What is my bias? Okay. We have the master pattern cycle, same one from the last slide. That gives us our value or a center of gravity. So since the weekly chart is long, it's going up, we're only buying the market. No reason to sell. We want the wind at our back. That's something that we have control over. We do not have to click the sell button. Okay. What's most important is to give it plenty of room to pay you. And there's a number of ways to do this. I'm going to talk about basically one right now. We recommend trading 1/5 your normally comfortable total lot size. This is very important. This is a lot of you probably won't be able to do this, unfortunately. But if you want to establish a new platform of confidence, this is what you need to do. We recommend trading 1/5. An example is if you normally trade one standard lot on Euro USD, this is $10 per pip. If you normally do this, you're going to want to go down to a $2 pip. And the point is not to have exacts here. The point is to get across to you is it needs to be low emotion, just like our previous slide. Low emotion position sizing. Okay. We want this thing to have the highest chance, because you're trading in trend, to come around no matter how long it takes and pay you. Okay. And if it goes against you, we want it not to crush your account, because some of them you'll eventually find the turn. But as you can see, this market went how many weeks? I see 3, 6, 9, 10 weeks in one direction. 10 weeks. That's 10 weeks potentially that you would have had back to back to back to back positive reinforcement if you only bought. And if you do it undervalued, like the master pattern video talks about, a lot of these are going to come around and pay you. The reason, if you're looking at this, you're like, yeah, I see what you're talking about here, but I always get stopped out. It's because you have too big of a position size. You're trying to protect the profit. That is not the point of what we're doing here. The point of what we're doing is starting where it's almost doesn't matter on the position size, and we're getting wins to wire neurologically. We're going to celebrate those wins. And then the losses, when you finally catch the turn on the weekly, we're going to minimize those. Again, it's your choice how much emotion you want to invest in each thing that happens to you. So if you're highly emotional, the things you program into there are going to be that program. So we want to avoid, when negative things happen, giving them more energy than they need. And when positive things happen, even at a minimal lot size, celebrate. Wire in. Be happy that you traded in best practices. You traded in trend. You're not breaking any of the fundamental rules. This is quality habits that you are writing programs on. Okay. So we want to start with that. This is, again, just an example. 1/5 that main lot size. Wide stop. A way you could calculate stop to start with is have your stop loss at a 1-to-1 risk reward ratio or bigger. Again, the point is to win. Okay. Let these things come around and pay you. Be open to layering in multiple positions. If you're in at 1/5, chances are I can almost guarantee you that most of your guys' problem is not nailing your entries perfectly. Your problem is staying in the market and not getting yourself stopped out, right? So when you get in at 1/5, it's so small that when the market goes for you, you could put in another position. If it goes against you, no problem. You're averaging in better as long as the idea still stays intact. And a lot of the details of this stuff is what we teach in the software program. And also I'm going to be going into this more depth in the advanced sessions, which we'll talk about in a second. So all this stuff is basically, again, the point is to win. That's what this strategy is about. It's not about making tons of money. It's about making your best practices that you do as a trader in line with how people make money long-term. And then with this, you'll be getting good experience. You'll be building positive associations, and then you can scale up on that, because every time you go to the screen, you'll have nothing but good experience of winning. And those one times where you do catch the turn, it'll be at a minimal lot size. So it's not going to crush you, and you can minimize it. You can make that choice. Be like, whatever. Like, I know, like, there's no way that I come away from this not being great at this. End of story. Okay. So be open to layering multiple positions. And again, this is about building confidence, positive anchors, not big money yet. So I think I've reinforced that. Okay, just to kind of reinforce this, we have the same weekly chart. The 1 hour bar chart, as long as the weekly holds long, it's going up. All undervalued prices are opportunity to make a profit once the market returns to fair value, in trend, or beyond fair value. And this works on all time frames, no matter what type of trader you are. Short-term, long-term, doesn't matter. Okay. If we look here, all these green lines are our values established by the 3 market phases. Every time you get below value, I'm just going to remind you, they all come back to value until the weekly rotates. All of them. The only reason that you're not getting back to value, at least the value is your base hit. The only reason you're not getting back to value is because of that pain threshold. You're over leveraging and you're using that tight stop. Remember, I said there is a sweet spot between having no stop and having a really loose stop. You will get better over time. But to build positive neuroassociations with trading, you got to let it be wide. It's okay to layer in a few positions as long as a weekly stays in that direction. Let those things come around and pay you at value or beyond. Over and over and over again until you're so confident, until you love the trend so much that you never trade against it again. That's where we want to get you to. Okay. So what's the takeaway here? You cannot win in trading long-term without a winning mindset. If you don't believe you're a winner, you talk negatively about yourself, about your experience, any wins that you have are going to be a fluke because you cannot be something that you don't believe you are, especially when it comes to skill set. So you need to create this one way or another, whether you do it this way or whatever. Your mind's creating programs with or without your guidance. Now you know that. You've been exposed to something that maybe you didn't know, right? Now you've become consciously aware. This is happening. You can look back through your life, all the emotional things you've been through, especially all those things. What kind of programs were written? How do you feel about those circumstances, those people, everything associated with that experience? What programs have you written already? I can guarantee there are some. If you choose to take conscious control of your programming, you can create programs that serve you. If you're struggling with overtrading, breaking fundamental rules, and general bad performance, you may want to consider doing a program reset on your mental game. Okay. Everything I've taught you here, you can find your own way to do this. Create an easy win strategy. The market ranges 95% of the time. It will come around and pay you. If you do that while paying attention to the fundamental unbreakable rules, then you'll establish a good platform of confidence. You could watch my free YouTube content. I explain a lot about technical analysis in the way that I believe is the best. So feel free to go to that and apply this, create your own easy win strategy around that.